Good day to you, traders. It is Tuesday, December 8th, 2020, and your cherry bomb trade probably got placed a few hours ago because I'm re-recording this message and the market's almost closed. So apologies. I had released a video earlier today, but did not realize that the audio was clipping out really badly. So my sincerest apologies, but let's get on with the trade, shall we? We're looking at an iron Condor today. So yay, some short premium, not a long, debit vertical or anything like that. So SPYs, highly liquid. That's always exciting. And we're in the monthlies. So super duper liquid, super duper likely to get filled. It 4 out of 4 rank for liquidity, an IV of rank of 13, and an IV percentile of 24. Despite those low values, if you get the cherry bomb emails from Tasty Trade, more on that later, so stay tuned how to get those cherry bomb emails, those trade ideas sent to you. You'll see that the author of that email, Tom Preston, talks about how it's still higher volatility now than pre-COVID. So we still are a candidate for short premium in that one. So with that said, maybe I piqued your interest. Cool. Stick with us because we're about to hop in to our platform. So allow me to introduce myself. My name is Neil. This is Option Theory, and you have joined us, and I'm so grateful for that. What we do here is we build out a portfolio using ThinkOrSwim's simulated trading feature called Paper Money, and you can see that on screen right now, down with me in the corner, so you know I'm a real person, right? And what we're going to be doing is building out a portfolio and testing our mechanics. So I invite you to join us. You can do that by hitting that subscribe button. If you've already subscribed, thank you so much. I appreciate you returning and watching my videos. It means a lot. So now that you know what we're doing down here, down in the description below, I did say we'd talk about that later, you'll find a link to head over to Tasty Trade's email sign-up page. It's a bit.ly link. It's not an affiliate link. There's no money being exchanged to me there. You just sign up for the emails, and they don't sell you anything either. They just send you 5 emails a week, right? Every trading day. 4 of those days contain trade ideas, and we put them on. And I'm hoping you guys, my viewers and gals, if there are any out there watching, could send me some trade ideas to do on Mondays. I'll give you a shout out, and even if you don't want to give me the trade idea, if you just want to give me a ticker symbol, I'd be happy to try to build out a trade idea, and you can compare, hey, that's not what I would have done, or whatever. I'd love to hear from you guys. It's always energizing. And now let's get on with the trade. Okay, so here we are in the Analyze tab, Add Simulated Trade. I want you to go to the monthly section here, the January 15th expiration, which as of today is 38 days to expiration. And so what we're going to do here is we're going to build this trade out. We're looking to sell the 351 put. I'm going to hold down the control key after I clicked on the bid for the 351. I'm going to click on the ask for the 349. That builds us our short put vertical. And of course, an iron condor is just a combination of a short put vertical with a short call vertical. And we're going to come up here to the 387. I'm going to hold down the control key again, click on the bid for the 387, and I'm going to hold down the control key and click on the ask for the 389. So earlier today, I collected 62 cents on this trade. I actually have this trade in on the margin account. I'm just building it in the IRA account so that you can see it more easily and it's not being affected by the current position. So we got 2 cents more, I think. I didn't even see what it filled at. We'll take a look at that in a bit, right? So do know that when you have paper trading, you do get the margin account and you have a separate IRA account, each with $100,000 of paper money that you can trade with, right? So now that we've got this trade put together, it's 1 contract in size. Yours may be 10 if you've never changed your defaults on that one. And so I'm going to go ahead and click on the risk profile so we can enter the phase at which we, check our probabilities. Make sure that your calendar is set to expiration here. The same date here in turquoise is the same date that you should see up here. What we're then going to do is set our price slices to break even at expiration. We're looking at a 54% probability of ending up between these goalposts, as I'll call them, right? Think about American football. We want to kick the ball between somewhere here. So we want it to stay in between these goalposts. The wider the goalpost, the smaller this credit will be, but the greater the probability of success though, right? So, and the good news is you can only be wrong to one side with an iron condor, right? So we actually have an iron condor on right now in Qs that required some management. If you stick around to the end, we'll show you that one as well. Okay, so we lost a penny in my chit-chatting here. Oh well. Now that we know our probabilities, let's go ahead and move to the confirm and send phase where we understand the max profit and max loss. I'm going to right click this. Of course, if we're doing a short premium, the max profit would be the credit that we receive on this one, right? And honestly, if I were doing this trade, which I don't need to do it again, I would penny it up and let it work towards me, right? This is, of course, slightly negative delta in this one, and you can see that here, negative 0.9. We would benefit if SPYs came down a little bit, right? Not a lot, but we would benefit, right? You don't make money fast with iron condors. At least that's not been my experience, unless you are doing them on an earnings trade kind of a thing, right? So now that we've got that, you could go ahead, right click this trade, choose confirm and send. We know our loss would be the $2 with minus the $60 credit. In this case would be $140. And that's defined risk, so you can sleep at night, right? All right, I'm not going to hit send, but I normally would, right? So why don't we go back now? I'm going to clear this trade out. We're going to go back to the margin account and see that the trade is there. There's the SPY trade there. There's the iron condor. Let's see how it's performed for us. So we have profited about $5-ish today. I know, something to, stop the presses, right? There it is. And I want to show you that, like, hey, these can test you, right? There's a probability that it'll go up, right? The market tends to drift upwards. What if it continues to work towards our call side and test that? Well, guess what just did that for us? We have over here, I'm going to positions and I'm going to go look at our Qs, right? Qs have blown through. This morning, they were right about here. Okay, so Qs have blown through that. I've already rolled the put side up once. And let's see how many days we have to expiration on this one. Where do I go? Back here. And I want to see on my Qs, I have 10 days to expiration. So at this point, I feel like it's not a bad idea to consider rolling this one, rolling the puts up again. So you could go ahead and take the Qs here, take the puts. I'm going to shift, nope. Come on. There we go, take these two, and then you could go ahead and roll these down, right? So choose Analyze Rolling Trade, and it's not gonna look perfect. That's definitely what we're gonna see here. So we gotta fix this. I wanna stay in the same expiration here. See how it's rolling it out in time? I actually just wanna roll within the same expiration, December 18. Hey, if you stuck this far into the video, by the way, awesome job. All right, and now I got to get my strikes that I want to roll it to. I want to roll it right to my my calls, my short call, which would be the 304. So 304 put, going to be that one. And we'll do the 3-2. In this case, there we go. That's what we would look like. We're definitely going to reduce our probability on that one, right? So our probability of profit is going to get even lower. But at this point, we're reducing the damage done. We're going to take a much smaller max loss, okay? So, and we should, if we get lucky. And what are those probabilities at this current moment? Not good. 7% chance of us ending in a profit zone. You could make 120 big ones, $1 bills, if that's where that ends up, right? So that's definitely something to consider. And what would be our max loss? So we have here $69, right? If it continues to stay in this range, and it could come back and go through this side, and we'd take a max loss, right? So know that going in, we'd have a max loss of $69. Versus, if we leave it where it is now, $105. So that's some trade management that I just kind of threw in as a bonus. For those of you that stick into the end of my videos, I do appreciate that. And I do want to call your attention to that. So, by the way, I like to give you a thumbs up on that one, right? my people that stay this long, thank you so much. I did also just realize that I often like to give you a Tastyworks probability as well. So here you see on screen here, we've got Tastyworks, and you can see that the P50 for this trade that we looked at earlier, not the Qs, but our initial cherry bomb trade is at this point, a 76% probability of taking off those $60 and in the next 38 days and walking away with it. So now that we did that, let's come back to ThinkOrSwim. And thank you once again for watching this far in the video. If you're already subscribed, would you mind hitting that like button, giving me that thumbs up? If you haven't subscribed yet, consider doing that. We'll be here for you. And when you do, hit that bell so that you're notified when our trades come out so you can get in the trades with us. Until I see you in tomorrow's video, everyone, happy trading.